McGonagle here. Going to take a look at the markets from a little different view, and hopefully I can be heard. Want to make sure you guys are able to hear what I'm saying, tuning in, and if not, I'm sure I will hear from someone shortly. But I am going to, as usual, start by taking a look at the markets. And from there, we'll go ahead and dig in, and not a whole lot of uh, price action movement. So a lot of what I'll be sharing is of last week as we head into Wednesday's potentially pivotal Federal Reserve meeting. And so let's go ahead and start here by looking at the S&P. And a couple of things I've done here. This is a daily price chart of the S&P. I've gone back to other broader periods where we've been in this fairly tight trading range. Over here, this is the current period. We're up, a 1/4% today, but we're in over a month time period here where we've been within a 2% range of this 50-day simple moving average. So pretty tight trading range. Going back to this April to June similar period where we had the RSI waffling, very similar to what we are seeing here. And let's see if we can also take a look here at this MACD, very level, flat momentum back here in May. Now, of course, we did have that nice breakout that took shape out of that long, lengthy consolidation period. Of course, we're unsure what we will see here relative to the continuation. Will we continue to trade sideways and move higher out of that or not? And quite simply, going back to this April into June period, one of the primary drivers of that new uptrend that took place during June and July was the fact that inflation was continuing to decline. We had a late May period, the smallest monthly increase in that consumer price index since 2021. And then these arrows indicate follow-up CPI reports that they were continuing to decline. The markets did pull back as inflation did tick higher, and here we are in that back and fill period. So on the lookout, of course, inflation, interest rates continue to be that primary driver here in the broader markets. So let's go ahead back and I'll share with you a view here of the S&P 500 that highlights some very critical support and resistance areas. But for now, we are very much in this tight trading range. We can see that the RSI continuing to waffle, and our momentum on this daily is negative. So near-term cautious to negative outlook for the broader markets does not mean that there aren't bright spots. So I'm going to go ahead and share that with you. Areas of the market that are firming up, that are looking quite interesting. So first up here, this is a view of those 11 sectors today. You can see not a lot in the way of price movement, but I will share with you two areas that are right next to each other here. First up, we're going to take a look at XLF, not the most exciting area. Of course, we love it when growth is working. We want technology to be on the move higher, but cannot ignore this firming up that's taking place here in XLF. This is the financial ETF. Now, let me just for comparative purposes share that. Take a look here at technology, XLK. Those of you that follow my work know that the importance here of getting that sector and industry group right is critical. It accounts for almost 50% of the price movement of that underlying stock within that industry group and sector. So that's technology. Getting back to the financials here, and you can see that they are trending upward. So from here, what I'm going to do is share with you a couple of names that are faring quite well here. They offer nice yields, and there are sound reasons that they are trending higher. So, and then from here, we'll pivot over. I do have a number of turnaround names that I intend to share with you that are going to be more growth oriented. But I did want to start by sharing with you these areas that are exhibiting vibrancy in an otherwise uncertain, unsteady period in the market. So, first up here is MetLife, MET. Take a look at this gap up into a nice uptrend. Company provides a nice 3.2% yield. I'm going to pull up a full quote here and share with you that among other products, they do offer life insurance. So, these life insurance firms are faring well. Two reasons the mortality rate has declined, certainly due to COVID. So when you're looking at year-over-year numbers, they start coming out with their earnings and so forth. They are going to, it will be constructive. Let's make sure I can uh, and actually, we're going to take a look at CDNS as we move forward. But here we are with that gap up. What I wanted to highlight here was this nice high volume, above average volume, shaping up with the name. I'll share with you a couple of other stocks in this same space. AFL, AFLAC. Now, we do know it for other types of insurance, but their primary revenue is life insurance. Same concept. We have a nice double bottom formation where the stock pulls back. And I'm going to go ahead and mark this up. So here is that pullback. We do not make it quite to that 50-day, which is good news. We have a rally, secondary pullback. So what we have is a higher low and then a rally beyond that. And this particular name, 2.2% yielder, firming up, poised for a nice $78 base breakout. A couple of other names, and then we'll pivot on to some other areas. But this is Prudential, and PRU is the ticker of 5% yielder. So here we are with that gap up last week into a base breakout. The company also has asset management divisions and so forth. So here we are with that 5-day simple moving average, a pullback, nice uptrend, same double bottom formation. And then we had that pivot back here at the end of August, the MACD black line up through the red, signaling an uptrend and then confirmed by that base breakout. One other area, not sure how many of you were and are following. Let me see if I can get a better view here. This is ARM, one of the largest IPO launches in a couple of years. Looks like we're giving back some of last week's gains. We're down about 7.5%, but we do have some more IPOs that are on the docket. And when that ARM came out and was widely received, we've seen vibrancy in these mega cap investment banking firms. This is Goldman Sachs double bottom formation. They are one of the major underwriters that are due to benefit from ARM, but more importantly is that the street is anticipating a lot more by way of IPOs going into Q1 of next year and beyond because of how well that particular IPO was received. So that is certainly a name that I did want to share with you. And then just a couple more while we're on these financials. This is Jefferies, JEF. The company is really expanding their move in opening an investment banking division, 10 investment bankers in India, and other strategies that are really propelling their growth outlook. So you can see this nice confirmed uptrend. We had that MACD black line up through the red crossover, and the stock's in a nice continuation rally. So I did want to begin by sharing that with you. From here, I wanted to go ahead and share with you other areas that are on the move. Now, what I wanted to do initially is, in fact, I can share with you how to do this so that if you're inclined, it is called a candle glance view. What you can do is add any number of ticker symbols, and I'm going to do just that. And we're going to take a look from here. What we want to do is make sure that we are on top of some of these areas in growth that have turned negative. This is software, semiconductors, also medical products, and um, we want to take a look at Brent. So I'm going to just go ahead and use this view. Go ahead and add this RSI. That's a relative strength indicator, and then update it. It's going to be in descending order. So let's take a look at what is showing up here at the forefront. No big surprise. Here we are with Brent crude up here at $94. So we're continuing to see Brent crude oil pricing trend higher. There are several reasons for that. Primarily, it is the supply demand dynamics that are in play. And so we are seeing a continuation there. And I do have some energy names that we can look at. Taking a quick look here at the 10-year yield, we're just trending sideways on that. And we have lost the momentum, which would be good news as we head into Wednesday's Federal Reserve meeting. And then as we move through, I want to make sure you're aware of some of these other areas that have turned negative. This is software. IGV is the ticker symbol. We have the MACD black line down through the red and a price break below that 50-day. And of course, those of you that follow the markets closely will remember last week with Oracle, gap down. And we were in the beginning throes of attempting to reverse that, but then a pullback. Let's take a quick look here at Adobe. And we are seeing a little bit more by way of a recovery. So with Adobe down about 5%, numbers were good, but not perfect enough. I'm going to take us into an intraday here with Adobe, share with you what we can be on the lookout for as we potentially reverse Friday's sharp drop. So on the 15-minute with ADBE, we can see that today this rally attempt has pushed that RSI up into positive territory. MACD is now up above that net neutral. So we do have good news there. However, more recently, and very typical of this time period in the broader markets, there is this upside momentum is now trending sideways. So we're not seeing that push any further. We can go ahead and drill out on Adobe to a 1 hour price chart, and you'll see that we're not quite ready for prime time yet. Let me just take a second here, mark this up so you know what to be on the lookout for. I view Adobe as a leadership name. I anticipate it coming back into play. So here's what you're going to need to see. This is taking us to the end of August, that last week in August, and we had that nice black line up through the red MACD crossover on the 1 hour with Adobe. The stock price closed above the 5 and 13 hour simple moving average. And then we had that nice RSI move into positive territory, which in turn, we had a nice 5-day rally. So here we are down here with Adobe on that drop, and we are not there yet. Let's see if we can get that MACD crossover, certainly as a starting point. But let's take a look at this period here going back to last week. This is when software was beginning to pull back on the heels of Oracle. We can see we had that MACD just trying to cross, but take a look. The RSI did not get into positive territory. So you do need that confirmation. Certainly for me, when I'm looking at these intraday 1 hour charts, here we are with Adobe. Take note on that crossover and that RSI, price above the moving averages. We had the beginning stages, but no follow through. So here we are now again on that 1 hour. We're coming out of an oversold position and see if we can regain that upside momentum on Adobe. Another area, if we can go back to our view, that definitely, if you have not noted it, it is for sure something you want to be aware of, and that is the semiconductor stocks, SOXX, continuing in a downtrend. We can see this RSI trending downward below that net neutral 50, but really what you want to look at here is the fact that SOXX, the semiconductor ETF, broke below that 50-day simple moving average, and it did so on pretty big volume here. We had the beginnings of the distribution phase back here earlier this month. Here's that black line down through the red, indicating that a downtrend has begun, and now we are below that net neutral. Pardon. So at this point in time, I'm using this August period pullback as the precedence, keeping an eye on that. We will want to hold support here at this 470 level. Pardon me. We will want to hold support here at this low in mid-August. If we do not, we will have to move back quite a bit further and lower for that next key area of possible support. And so we did have this downtrend reversal attempt that faltered fairly quickly. So unfortunately, semiconductor stocks, which have been clear-cut leaders, certainly since January of this year, near term have lost their momentum. From here, we can pivot over to a weekly chart, and I want to share with you what to be on the lookout for, because it is an event that does not take place that often. This is semiconductor ETF. And if we take a look, now this, of course, was the beginning of that bear market, the beginning of 2022. What I'm highlighting here is that RSI on the weekly getting into negative territory. And at this point in time, we are just above that net neutral 50. So this is something we want to make sure it holds. This is that August pullback, using that as precedence. We got just close to that net neutral and did not trend lower. But we do on the weekly still have this downtrend. Certainly for the intermediate term, we are still poised to trend perhaps sideways or lower, but we are not in a nice uptrend period that we have been on this longer term weekly. This is taking us back to the end of 2022. And then here we are with that pivot June into July period when we had that nice rally in these growth stocks and in the broader market. So you can see, just taking a look at the intermediate and the shorter term daily, that semiconductors have certainly more work to do. That said, there is one name in these semiconductors, and when I'm looking at semiconductor stocks at this point in time, it is not for purchase. These are names that I'm going to put on my watch list so that when the semiconductor industry group comes back, those stocks that have held up the best are going to be your new leadership names. I'm not suggesting AEHR. That is certainly a smaller name within those semis, but certainly one that you will want to have on your watch list. Now, I want to make sure, let me just unfortunately, I don't believe I can get to any questions, but in the meantime, I certainly have more here that I do want to go ahead and cover with you relative to stocks that are beginning to turn around. Let me just make sure, I'm going to go back to this view, and I do want to go back to that industry grouping and make sure that we've covered certainly small cap names down and out and continuing to exhibit weakness with the momentum trending downward for those smaller cap names. And true to any area, there are some names that are bucking that downtrend, but by and large, the overall group is in a downtrend. So that is what I wanted to make sure that we covered. And then also taking a quick look at this sector view and making sure that you're on top of where the strength is relative to where it is not. Make sure you're not overweighted in these weaker areas as we head into Q4. So here we are with these 11 sectors in the S&P 500 energy front and center. Now, you might have noticed that the price of oil is skyrocketing, but the energy names are not overall, they were flat last week. We're up about 0.5% today. So from here, let's go ahead back and see other areas that I wanted to make sure you were aware of that are down and out. Industrials just continuing to suffer, but what I want to do is share with you this view of technology, and we did this at the beginning. XLK now below key moving averages and generally trending choppy, but trending lower. So let's go ahead and take a look at energy because you want to be aware of the sub-industry groupings within energy. Not all groups are created equal. The strongest area has been these equipment guys. So I'm just going to click onto that using this view. And what we can do quite quickly is sort it by this stock charts technical rating. That's going to get you in front of those names that are most technically sound. The higher, the better. For my work, I am going to be driven to these larger, better known, more liquid stocks. And here we are. This is Halliburton, HAL. We had that nice base breakout back here in the beginning of September into an uptrend. I'm adding that 5-day simple moving average. And you can see this is what is shaping up in energy stocks individually is more of a sideways to up price movement. And then from here, taking a look at some of these other names that are up here at the forefront. Those of you that subscribe to my MEM Edge report will be familiar with Schlumberger SLB. So these equipment guys have pivoted. Schlumberger has been around forever, as has Halliburton. They have pivoted into tech companies. They are providing products and services to these drillers, to these producers, that in turn is helping them with their profit margins and their bottom lines. So they are the picks and shovels, if I may, of the energy group, have been the strongest area and are continuing to exhibit outperformance. Certainly, you can find names here within the E&P guys. These are the exploration, the Exxons of the world. And one name that comes up quite a bit in my screening, but it's really just waffling here, is Noble Energy, NE. So you can see how this momentum flat MACD is signaling what's shaping up here is quite a bit in the way of sideways price action. So let's go ahead. I still have some good time left. What I did want to do is share with you some names that are exhibiting quite constructive price action. And first up is a company that is due to report their earnings next week. This is Costco. I'm going to go ahead over to MarketSmith and we can take a look at this stock and see how it performed. Here we are with a daily price COST. They are due to report next Tuesday, and I wanted to take a look at their most recent quarterly release at the end of May, and the company did show year over year about 18%. And for this particular company, that was a very good number. You can see that the stock then had this 2-day super rally into an uptrend. Now, bearing in mind that we are pretty much priced for perfection. The stock is up here. Let's pull up weekly on Costco, and you'll see that we are getting up into new, certainly near-term high territory. When the earnings release is out, it will need to be a fantastic number. We're not priced down here when this prior quarter came out, so that there was much more by way of upside. So that one, keeping on that one, again, due out next Tuesday. We can take a look at some other large cap names that are firming up here. This is MasterCard. Here we are with that base breakout. It is still in a buy zone. We're using this 392 base breakout level, and it's holding up really quite well. Visa, not quite as well. Looking at names that are in growth mode and at a new high, this is Celsius, CELH. This is a gap up upon the release of their earnings, 330% year-over-year change, 130% above estimates, so just pivots right into a nice uptrend here and a continuation rally. Another stock that comes up a lot in our trading room and, for good reason. This is DraftKings DKNG, and you can see that the stock did pull back after the release of their earnings, but it is trending higher now. We're back up above these moving averages. I'm gonna go ahead over to this particular view so we can get a better feel for these momentum signals. So here we are, DKNG up here above each of these moving averages. Your momentum more recently is leveling off. We don't have that nice sharp uptrending momentum, but we are certainly constructive in an otherwise choppy market. Your RSI up here in positive territory. So we're sitting up quite nicely. One other name for that semiconductor watch list. I'm just looking at my list. So if it appears that I'm moving around a bit much, I want to make sure that I did highlight Intel. The company came out with news here. They had been pre they received funding from an order ahead of time. The company also had other positive news, and it is holding in really well relative to the overall semiconductor grouping. So it'll be interesting to see if it retains that bullish bias. You can see it has a predisposition toward volatility where it will have these significant moves, give back half of it, another move, give back more than half. So bear that in mind when you are looking certainly at this or any other name. You want to see how does it behave historically. So one other name in the tech space that is on my watch list, this is Cisco, gap up on earnings into an uptrend, pulling back very orderly, and we'll see if we can regain these shorter term moving averages and get that uptrend back into play there. A couple of other names before I sign out. I want to thank you guys for staying here, and hopefully we'll get those rooms up again. But I do want to share with you a couple of names that are exhibiting beginning stages of potentially turning. Not the prettiest of charts. This is Northrop Grumman and OC. That we are seeing vibrancy in these aerospace and defense stocks, certainly today, but we did move back above this 50-day simple moving average. That momentum is just not quite there yet. Let me go ahead and share with you another name that might be a little more compelling. Yeah, that is really down and out. That is TripAdvisor. It's on the heels of, let me just pull up, this is Booking Holdings BKNG in a nice uptrend. And one other name, IGT, International Game Tech. You can see that the stock last Thursday had this gap up, super big volume, and we can see that momentum shift. Black line up through the red, MACD now in positive territory, super big volume on that gap up. And then we had a shift of the RSI momentum into positive territory. With this name, I'm on the lookout for a base breakout at about this 33.5 level. But for now, we are digesting this big gap up, very orderly price action. So I think this is a great way to end today's session. And we'll look for you. I will be back on Thursday. Have a great rest of your day, everyone.